Another great day in the market. My previous video talked about the break and retest. Previously, it was to the upside. This one is to the downside. As you can see right here, we start to lose this previous area of support that I had marked out. We start to reject it. So I target the next level of support, which is 21,400. In general, NASDAQ, when it breaks a key level like 21,500, you're likely to go directly down to at least 21,450, but most likely you'll get a flush right down to 21,500. And as you can see, especially with the volatility, I do really like to trail my stops. That basically means that once my stop is below break even, I essentially will not lose in this trade, and the trade is then risk free. Then, as we get closer to the initial target that I had, I make the stop as tight as possible. That way, I lock in the most amount of profit, which also preserves my total distance to drawdown because trading with Apex, it has the intraday trailing drawdown. So basically, as a trade moves in your favor, you want to, yes, let the trade work, but you also want to make sure you lock in the most amount of profit as possible. And this protects you from hard bounces like NASDAQ. It can bounce 20 to 50 points in 1 minute. So you don't want to be caught in that. Not only because you lose that profit that you previously had made, but it also brings you closer to that distance to drawdown. And yes, as you can see, this trade continued to work in my direction, but as a trader, one thing you'll learn is you'll never catch the whole move. Your whole goal is to just catch little pieces of these big moves, and you just try to do that consistently every day, and those wins will add up. Now, if you were a trader that was trying to pick the bottom today and kept getting stopped out, which caused you to lose money, this little tip right here is what saves me from fighting the trend, and it allows me to avoid those kind of losses. Basically, I never long below the 50 EMA on the 5-minute chart. And I want to get in as close to the 9 EMA as possible. This kind of allows me to set up a better risk to reward. You don't want to be the kind of person that missed the opportunity and then tries to short down at this level. And this is why plotting out your key levels every morning before you trade is important, because then you can kind of get an area of where the market is most likely or most probable to start to bounce, which in general can give you a good area to take profit on your short. So if you got anything from this video, make sure you like and subscribe and follow for more. I'm going to be trying to post these daily video breakdowns as well as tips and tricks moving forward.